Oh, you should.
Go right ahead.
I got to run an errand, so if when you're done, if I'm
Okay.
not back, just leave it running.
Okay. All right. All right. I will get going then. All right. Um, well, good afternoon, everyone. Today is Monday, the 21st day of April, 2025. Now, um, if you have not taken a free trial with us and you want to take a free trial with us, go here to mytradingiq.com. And on this page, all that we ask for is your name. I'm sorry. On this page, click on the purple button right there. Right there's no credit card required for the trial. Click on the purple button. When you click on that, it is going to bring you to this page where all that we ask for is your name, your email, and your phone number. All right, there are 5 multiple choice questions. Down at the bottom of all those down here, there's a thing right here. Now, Shiva, you're not in here, but if you click on this link right here, if you don't have TradingView, click on this link right here to get TradingView. All right, it's going to bring you to this page where just watch this video about TradingView, the TradingView platform. Watch that video. You're going to end up clicking on this link right here that is going to bring you to this page. And on this page, um, I use the premium, but you don't need that. If you want to have just 2 charts, use the essential. If you want to have 4 charts, use the plus. Either way, that's all you need. Okay. If you get either one of those, you're gonna have to give us your TradingView login ID. The TradingView login ID for you guys, most of you have your TradingView login ID right up here. There'll be some sort of circle or something like that that might have your initials in it or something like that. Click on that. It is going to say something like this: logged in as some ID. That's the ID that we need from you. Okay, that is the ID we need to get from you. And that is it. Once you get that, you give it to us, and then we can enable the indicators for you on your charting platform. Okay, we'll enable the indicators for you on your charting platform. Now, there was something that I was thinking of. All right. Yeah, that's all you need to do. All right. So here now, our results for today. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today, the 21st day of April, 2025, we made 95 ticks on the NQ. We lost 15 on the Russell. We made 110 on gold, and we lost 32 on the ES. That put us at plus $1,900 a contract this morning. Today, it took 2 minutes and 1 trade to get to the goal for the day. At that point, we're up $1,500, and we took a total of 24 trades this morning. Okay, 24 trades. And that put us on the month now. On the month, we still have 2 weeks left, I think, of the month, don't we? Just about. Hang on, let me see. We have 1, 2, 3, 4, 5, 6, 7 days left of the month. So if we're averaging $2,000 a day, 7 days would put us up at 38,000. I don't think we're gonna make $2,000 a day the rest of the month, but it'd be pretty close by the end of the month. Be pretty close. But we should be about 35,000, 34, 35,000 by the end of the month. Okay, and that again is with 1 contract. So we're up 95 on the NQ, minus 15 on the Russell, plus 110 on gold. Gold was a good one today, and 32 on the ES. Took 2 minutes and 1 trade to get to $1,500 this morning. That is with 10 contracts on it. Took a total of 24 trades. So on the month, as I said, we're at 24,390, averaging $2,032 per contract per morning session. We have now gone 65 days this year getting our goal. So every day this year we got our goal. And we've gone 81 business days, or 81 trading days, not really business days, 81 trading days since our last non-green day. That means in December I had a day that was non-green. I think it was a yellow day. Yellow or blue? It was in December. It was yellow right here on this day. I didn't get my goal for the day on that day. We ended positive just barely, I think, on the last trade. Not a lot of trades that day, only 14 trades that day. We ended positive on, I think it was on the last trade. We got to $10. But that was the end of it. I mean, after that, if you go look back here, in December. Right here, December 19th is when we started using the divergence trade setups and being aggressive, much more aggressive trading. At the end of the year last year, last year is when we started that. And you can see that it's made a huge difference in the overall results and in our trading. Now, let's see. So on the year, we're at $108,677.50. That is with one contract. Multiply that times 10, and you have where we really are. Over 65 days, averaging $1,671 per contract per 2-hour trading day. That's on the year. We're averaging $1,671 per day. Following the 24/20 blueprint, so far this year, if you quit trading when you got your goal for the day, you would have only had to work 8.7 hours, and you would have averaged $2,923 per hour so far this year. All right, just much better than ever. It's 2025 gonna be the best year ever. All right, on the gold now. On the gold, let's see. I want to go all the way over here, like this on the gold. Right. Gold is where we had, why don't I start out with the other ones? Because gold is where we made the most money today. So I want to take a little more time with the gold because I drew on that a little bit more than everything else. Now on the NQ, we took some aggressive trades on the NQ. It was the only market we took aggressive trades on. And for the most part, they worked out. We ended up positive on the NQ, but our very first one was aggressive right here. What that means is I bought, as soon as it went into the oversold, I bought the open of the next bar and I got 75 ticks profit. I did the same, I missed the next one right here, which would have gotten us another 75 ticks, and I missed the next one. Actually, I got a break even on the next one right there. I missed the one after that, which still would have gotten us probably a break even again if I'd have gotten it. And then I took this one and it stopped me out. I came within a tick of getting my stop to break even, and it stopped me out. And I took this one, a normal conservative trade in here, and I ended up getting a little bit of profit on that. So we went from 75 down to 15. Then we got, it looks like 32 ticks to get us up to 47. And then we stopped out over here. That put us down to minus 13. Then all the way over here, we took another aggressive one that got us up to 21. And then we took a regular conservative trade right here that got us to 53. Then we did another aggressive one here that got us to 73. And then somewhere we did another one that got us to 95. And those are all the trades that we took on the NQ. We ended up with 95 ticks on the NQ. Okay, during the break, there wasn't much at all. It was slowly working its way down. Now, when Dwayne comes on, he's going to talk to you about the fibs and all that stuff. You will be able to see all that when he comes on, right? For right now, we'll wait till he comes on. I'll show you a little bit of it on the ES in the next session. Next chart here. I'll show you a little bit of it on the ES. But the markets are clearly in a downtrend right now. And this close to the beginning of the week, if you end up at the lowest weekly trading zone between today and tomorrow, by the end of the week, it should be really bullish the rest of the week if that's what happens. All right. That's where we're on the NQ. Now I'll go to the Russell because we hardly traded at all on the Russell today. We had just a few trades, and let's see. Well, the first one here was a stop out. We were at minus 25 on that one. Then I think we had one break even trade in there somewhere. Maybe not. No, sorry, we had a +1. I didn't put down the +1. We had a +1 at the beginning. And then I stopped out on this, and it wasn't actually minus 25, it was minus 26. But that put us at minus 25 overall because I had the wrong bracket on there. And then I picked up 10 ticks here. That got us to minus 15. During the break, there was only one more trade right here that worked out to be a really nice trade. There's another one just triggered right now. There's another trade here. If I can find my DOM, I will put it on. I can find it fast enough. It looks like it's still good to go right here. So here it is, right there. Let me do window, always on top. All right, now the last one went down, put in a flat spot. The pullback was just about 100% pullback, so that's pretty good. The entry point, I would have liked to have the entry point a little higher than this one right here. If I could have gotten the entry point up here, then the stop would have been up above the prior swing high. It's not the greatest entry point, but it's not bad. If you look at it this way, I just put that on top right here. If you look at it this way, all right, the entry point is just a little above the 50 retracement right here. So it's not too bad. What I'd be looking for is a move down here to the prior swing low. That's what I'd be looking for right now. Okay, just to move down there to that prior swing low. All right, so let me undo this and slide that over there. That was all we did on the Russell today. There was just like no opportunity today on the Russell, very limited opportunity. The ES, however, we did do quite a bit of trading on the ES. I'm going to slide this way over here on the end. Well, quite a bit, I say. We had 3 trades on the ES. We started out right here. The very first trade on the ES, this is where we got our goal today. We picked up 12 ticks on that one. Then we picked up 16 ticks on this one to get us to 28, and then 4 ticks on that one to get us to 32. And that was all that we did on the ES. It looks like it's going to stop us out right here. Not sure, but it looks like that. We went through some chop right here, and I was explaining to everyone how this chop worked. And I didn't take this trade right here because I wanted to pull back a little bit more. I should have gotten it on the pullback that it did have, but I didn't move fast enough to get it there. This is almost stopping us out, this Russell trade. I didn't move fast enough when it pulled back right here. I should have shorted it on that little bit of a pullback right there, but I talked right through it. I even drew a line there where I wanted to short it, and I didn't. And I said, if it closes down, it's going to close right here, and I don't want to short it from there because that would put our stop right here before it gets to the swing high. And what I'd rather do, I did stop out on that Russell. And what I'd rather do is short it right about here. I was talking about it and drawing a line instead of actually doing it because that would put our stop up here. If I would have done that, then we would have had that nice move down, but I ended up with nothing. During the break, it doesn't look like it gave that much more here during the break, right? That was what happened. This was at 10:42, and then an hour later, it didn't even get into the overbought. So here we are, 10:42, almost 2 hours later, well, an hour and a half later. It still hasn't given us another valid trade setup yet, right? And this leg down right here is just like this leg down. Now, Dwayne was talking, he's going to talk about this when he comes on, about these numbers right here and what the retracement was of these numbers. And he's going to show you in a lot more detail how if this bar closes down below this today, that is pretty bearish going into the rest of the week. Now, I don't know that that's going to happen. If it does happen, I mean, there's no real reason for it to not happen. We have some bond auctions that just happened, I think 30 minutes ago, but nothing else in the news today, and nothing else high impact in the news until Thursday. It doesn't seem like there's anything that's going to be here to push it back up, unless who knows? Yeah, there could be some unscheduled rate cut or something like that that may happen. And Dwayne will probably talk about that when he comes on in a little while. I'm only going first today because Dwayne said he had something came up and he had to jump into that. But on the ES, this is a daily chart on the ES. If we close down below the MA1 or the blue and climbing right here, that's going to turn into red and falling. And then we'll look for a pullback to it and then a push down below it. Much further down. I was thinking this down here. If we close down below there, then I'm thinking we're going to get all the way down here to 45.09. Okay. That's what I'm thinking. All right. So we did the ES, we did the NQ, we did the Russell. So I'm going to get into the gold now. All right, and I'm going to go back out to 4 right here, and on the gold. All right, and just check and see who's out here right now. You guys that are out here. I don't know if you heard me when I said Dwayne had something come up. That's why I'm going first today. All right, so I did those 3 markets, and now I'm going to get into the gold. The gold is where we made the money today. We were up 110 ticks on the gold alone. So if you go and look at that in here, that is the majority of the 1,900 bucks. It's like all but 800 of it was gold today. And it started out right here. Our first trade on gold, we picked up 10 ticks, and then the next trade we picked up 25. That got us to 35. And there were a bunch of trades all through here that I didn't get. Right through here, there's one there. There's one there. There's one there. That one wouldn't have put in a lower swing, so you wouldn't have gone after that one. But this one right here, you would have gone after. That would have been okay. This one right here would have been okay. Didn't put in a higher swing. Didn't get into the overbought is what I'm saying. You see, if it doesn't go into the overbought right here, you don't take another trade after it in that direction. So it didn't get into the overbought there. It didn't get into the overbought here. So there were a couple more trades in here that I finally did get into. So after this one here, we were up 35, then we went to 39, then we went to 44. Then we had this huge leg up. We had a huge leg up here, and we had a huge leg up on the other markets too. All the other markets had a big move all at once, I think around that time. All right, and you can see we didn't do any trading in there. I did a lot of talking and not a lot of trading. And then finally I did take a trade in here. I was expecting it to get down to this level, but it didn't even get down to the prior swing low. So we went from 49 to 59 there, then we went from 59 to 84 right over here. So we had a 25 tick trade there. Then apparently a lot more talking happened, and we went from 84 to 90 there, and we went from 90 to 100 there, and then 100 to 110 there, and then we had a break even right there. Nope, that's not it. There's still more trades. All right, so there's even more that I had on gold that I didn't calculate. I think these were 10 tick trades each, 10 ticks there and 10 ticks there, if I remember right. So it should have been 130, not 110. Anyway, during the break, let's see, during the break, and we got into the break right in here, and during the break, you would have been looking for shorting opportunities coming out of the overbought, which would have been right here, would have been your first one, right? So that would have been one, and then it didn't go into the oversold, so you had to wait till it came out of the oversold. Right here would have been your first one, that would have been good. Here's your second one, that would have been good. Here's your third one. That would have been good too. It would have been a little bit ugly, but it would have been good overall. And then it had to get into the overbought before you could take another one. No, you would have taken this right here. That would have stopped you out. You find a way to stop out right there. And then you wouldn't take another one until all the way over here, but then it was going in the other direction when it flipped the YBR right here. Okay. So you'd be looking for a short right in here. That would have stopped you out. So you would do another one until right here. That would have been okay. Then you would have been looking long because the YBR flipped and not gotten one. And then over here, short. Right there would have been your first short. Would have been okay. You would have been waiting until now. Use a down close of this bar. Now this isn't going to be the prettiest one right here because this is your leg length. From here to here is your leg length, and the down close on that bar is going to be right here. So the 19, this is a 9 range. So with the 9 range, you move your stop after 5 ticks. So you'd have your stop at break even when it gets right here. You only have that much room left to get to the swing low. So it's not the prettiest trade of all the trades, but it is a trade if it happens. Okay. And that's it. So I'm going to keep trading here for another 11 minutes or so. All right. And we'll see what happens with it. All right. So on the gold, we needed that down close right there to take the trade. I'd rather see it pull back a little bit like it is right now to enter on a pullback. And I didn't get filled on a pullback. So if it goes down to where 5 ticks, if it's 26.5, then I'll take my order off. And there it goes. It just hit 26.5. My order was waiting up there. Bang, all gone. Okay. This is in the oversold. It needs to come out of the oversold. I'd really like to see it go down and get flat down here on the bottom before it does. Same thing with the ES and the NQ. Okay. Let's see this pull back up here. And Oops, I was talking that whole time. My mic was off. I was saying on the gold, there was a trade here that I missed. Here it is. Okay, my fill not filled. And I was saying on the NQ, it had an aggressive trade from up here, and we needed that to not hit the YBR. If it would have hit the YBR, then it would have flipped the YBR. But not hitting the YBR actually turned it into a conservative trade. And wouldn't you know, I accidentally placed it on the wrong DOM, and well, I'm in profit on it. So I'm just gonna throw my stop to break even, and I'm gonna reconfigure my DOMs so I don't do that again. I ended up shorting the ES instead of the NQ. I was trying to short the NQ. Lock in a couple of ticks. It wasn't a valid trade there on the ES. It was a valid trade over here on the NQ. You had two valid trades. One was the aggressive short trade from the top here, and you can see that went at least 50 ticks and then a whole bunch more in the next bar. And the conservative short trade would have been from right here, which went to at least 20 ticks, which would have gotten your stop to break even. Okay. Okay. Let's see, on the gold right now, we pulled all the way back up here. We need a down close. A down close right here on gold would be a great spot for an entry, right? If you get a down close right there, or a down close on the next bar, as long as the next bar doesn't go up anymore. Okay, if the next bar were to open right here and then close right down, that would be good. Or just a down close right here would be a great spot for the gold. All right, now the reason I say that is because of the retracement level. So this closed up, now it's at 100% right here, so that's not bad either. This is coming together really messy. Right, we didn't put in a lower swing, we don't have a higher swing yet. Now we do have a higher swing. Okay, so now it's getting choppy on us. And we have to wait and see. Okay. All right. Well, it is 12:24, and here's the trade from the swing high right there. Okay, here it is from the swing high on the gold. All right, I don't have the best entry on this, but it's got to go 5 ticks into profit for me to get the stop to break even. There's a few. I think it's going to make it down to right here anyway, to 26.6. 26 point, that's just right there. That's where I get my stop to break even. Has it gotten down there yet? 26.8. It should get down there for us. I don't have a very good entry, and this entry should have been at 27.5. I'm in at 27.1. All right. Well, we're in it. Now, if things go like it really should go, it's going to get all the way down here, but that's far enough right there to get my stop to break even, so I don't have any risk on the trade anymore. I'll lock in a few ticks on this. It should go all the way down here. See what we just did is a big whip that went all the way up above the prior swing high. Now I'm thinking it may be just trying to, just get a couple of ticks on that. It may be just trying to find a direction right here. All right. It didn't put in a lower swing here. It didn't put in a lower swing there. Just gapped down right there. But it still didn't put in a lower swing. Okay. So there's divergence between the indicators and price right there. You guys see that? All right. Now, I know that I normally come on. For those of you guys who are just getting in here right now, I know that I normally come on at 12:50, but I came on at 12 this time. Dwayne had to go. Had something pop up and he had to go do it. So I am on right now and I'll trade for a little while longer with you guys. If you guys have any questions, just type them in. Okay, if you have any questions.
Feel free to stay as long as you want.
Okay, you're back. Okay, well, I'm going to stay until 12:30 anyway.
All right.
we had one profitable trade so far, and two profitable trades, but one of them was a mistake. I put it on the wrong market. And I'm just kind of waiting. Everything's gotten kind of choppy right here. But we did have that big move down that you in particular were talking about earlier. What was it going down to? 165 or something like that. We said we need another 25 tick move or 25-point move on the ES, right? Is that what you were saying earlier? We had this move right here. That was from 88
We are
all the way
now
down.
sitting right on top of the 24% reverse fib.
That's right. It was right down here at 151, 152, somewhere in that area, right?
5160. Yeah, I told people when I popped in the room this morning, I said, call it safe 5165. Because
Yeah.
at the time we were substantially higher.
Yes. We had that big move down. So now
This is
there's got to
right.
be
We're sitting
something.
on the same support right now. The 24% reverse fib. That was the low of April 10th. So we've got support times 2.
There's got to be something, some stimulus to make the market move up from here. Because right now it's got nothing. There's no reason for it to go up. We don't have
According to
any
all the news
high impact
articles,
news.
it's because of the feud between Powell and Trump.
Yeah. Well, we'll see who wins on that one. But in the end, trade what's in front of you, and you don't have to worry about that. So right now, on the gold, did we get down below the price swing though? That's what we were. I mean, I was focused on the gold because that's where we were making the most money today anyway. But we did get down below that low and that low. So this isn't a great spot to short this right here. I would rather have an up close on that or a pullback on this bar. It didn't print right there for us. Let me just do this and this. You see it didn't print. Now it's printed. So the pullback right here, while I was refreshing it right there, the pullback right here would have been the spot to short that. I didn't short it at all, so I'm not short on that. But that is the gold. The gold should make another leg down, probably this big right here. But it got all choppy in here. It got all choppy and crunched up. So we'll see what it does do. I don't know what it's going to do. And well, that is what we got right now. All right. Well, I guess I can wrap it up and pass it back out to Fabulous Phoenix, Arizona. Before I do that, though, let me just show you, because it's now 12:30. Let me just show you this. All right. Well, this is how we ended up today, up $1,900 a contract. It was actually more than that because I didn't count 2 trades on the gold. We're actually up probably $2,100 a contract. But today we were at 95 on the NQ, minus 15 on the Russell, plus 110 on the gold, and plus 32 on the ES. It's 1,900 a contract. 2 minutes and 1 trade today to get to the goal for the day. At that point, up $1,500 into a total of 24 trades. So on the month now, we're at 24,390, averaging $2,034 per day. On the year, we're at 108,677, averaging $1,671 per day. If you've not taken a free trial with us and you want to, go here to mytradingiq.com, click on the purple button. No credit card required for the trial. Click on that purple button. It'll bring you to this registration page. Just fill it out. All right. If you haven't filled out that page, sorry, down at the bottom, we need to get your TradingView login ID. All right. If you don't have TradingView, click on this link right here to go get TradingView. It's going to bring you to this page. Watch this video. Click on that link. It'll bring you here. All you need is Essential. You do have to get real-time data. Real-time data is $7 a month if you get it through TradingView, or it could be free from your own broker. All right. So with that, I can pass it back out to fabulous Phoenix, Arizona in Studio A, overlooking South Mountain, America's largest city park. Dwayne, if you are ready.
Yep.
Excellent.
Okay, recap of the morning session.
Today it took 2 minutes and 1 trade to get to $1,500.
Good job.
Thank you. Thank you very much.
All right, guys, we're going to dive right into Logic 247. A little off schedule today. We'll get back to our normal schedule tomorrow. All right, we're currently in week 351 of Logic 247. That's our 24/7 around the clock E-mini alert service. Not just E-minis, but also crude, gold, and silver. Over the last 351 weeks, we've issued over 19,400 individual handcrafted alerts. So we now have less than 600 alerts to hit that big round number I've been talking about at 20,000. So make sure you use the logic alerts to learn how to read the chart. Since the markets opened last night at 6 p.m. Eastern, issued a total of 14 logic alerts, and when Valerie did the recap this morning at 6:30 a.m. Eastern, we were still waiting on the outcome of 7. That gave us 7 actionable alerts, of which 1 stopped out, or 14%. Again, what we've averaged over the last 351 weeks, or 19,400 individual alerts, 20% or less being stopped out, based on market structure and the simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, last week we had 0 stopped out all the way up until Thursday, and then we ended the week at 8%. So the last recap I gave you, we were at 9%, but when Valerie did the final recap for the week, it was down to 8%. Okay. But here's where we sit so far this week as of 6:30 a.m. Eastern this morning. Valerie will update the recap this afternoon, early evening, as she does each and every day. Every logic alert has an entry price, an initial target, usually additional targets, and they all have a final trade to target. Now, the initial target's designed to help you get your goal for the day. If you'll use those logic alerts to draw horizontal lines on your chart, you will soon learn how to spot what the next potential high probability move is. You need to be able to look at any chart of any market in any time frame and instinctively spot where potential resistance is, where potential support is, and in doing so you reveal the window of opportunity that exists between those 2 points. You can fish all day in a spot where there are no fish. That's not fun. So the alerts, they really show you where the fish are, where they'll literally jump in your boat. So I can't encourage you enough. Use them as they're intended. And yeah, you can trade them. Sure. You traded them last night or last week. I'm sure you're a very happy camper. But make sure you learn how to read the chart. Okay. So here's where we are on this fine Monday, with all the markets, indices selling off big time. Now, long before we had Logic 247, which is hard to imagine because that was 351 weeks ago. For many years, we just had our original alert service, the concierge trade alerts. And they're different in a number of different ways. Primarily, they don't come out around the clock. Logic alerts can come out at 2 a.m. or 2 p.m. as opportunity presents. Futures trade around the clock. We got traders around the globe. Our day session is their night session, and vice versa. Now, Sunday nights, it's usually not possible for me to get the CTAs out prior to the open, and I put a post in the discussion group last week. I think it was on Thursday, but anyway, it says I'm not going to put the CTAs out 5 minutes ahead of the open until we're done with earnings and these gaps, because the market's only closed an hour. Under normal market conditions, we don't get gap opens and gap open higher or gap open lower, except on Sunday night, and those are usually very high probability trades. But 2 days last week we had the market open on a regular weekday and price gapped all the way down to the short target at the open. So that doesn't do you any good. So this week, till things settle down, don't expect that 5:55 p.m. post of the CTAs as we've been doing for the past couple months. Once things settle down, I'll go back to that. Okay. So what all that means is all of our members, all of our trial members, had all of these targets 7 minutes after the market opened last night. The S&P, the Dow, the Russell, crude, the NQ, gold. Oh, and by the way, crude, we rolled forward to the M or June contract. The NQ, gold, and silver. All members, all trial members had these targets 7 minutes after the open. Okay. So from here, we'll go to the daily chart of the S&P. There we are. And as you can see, price came down, hit that 24% reverse fib that I was talking about in the live training room this morning. And we were down about here-ish when it happened, when I was talking about it. And I said if we close here or lower, and we are now lower, there's the potential when we open tonight at 6 p.m. Eastern, balloon climbing, which is bullish, may turn back to red and falling, as it did here. Now, when the step line crossed, we got our pullback, but we didn't quite touch the BBC. The green lines called the BBC, it stands for bull bear cross. When price crosses above the green line, we're bullish and expect higher prices. When price crosses below the green line, we're bearish and expect lower prices. The daily chart is important no matter what you trade, stocks, futures, crypto, Forex, ETFs, because the institutional traders, deep pockets that move price, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Has everything to do with account size. So if you just spend 2 minutes with whatever market you're going to trade, looking at the daily chart, number one, you can see what the deep pockets are doing. Not only did we know they were selling, but we knew where they would run into support. And I gave it to everybody in the live training room this morning. And if you've got the fibs, reverse fibs, because we're in a downtrend, so you draw from the high to the low. In an uptrend, you draw your fibs from the low to the high. So we put in this low, April 7th. We've revisited the 50% fib retracement, reverse fib. And here there wasn't enough strength to get quite back to the BBC, but price, remember, always reverts to the mean. In our case, the mean is green, and as I just explained, we call it the BBC. And as you can see here, when price reverts to the mean or pulls back to the BBC, whether it pulls from below or pulls down from above, the pullback holds more often than it doesn't. It's very important to understand and remember. Now we have two reasons right here for the support. Number one, it's 24% reverse fib, and it's also the low of April 10th, where we came down and tested that 24% reverse fib. But look where we closed. Way up here. We jumped from 51.60, and then this day we closed at 53.04. From 51.60 to 53.04. You do the math. There's a whole lot of buying going on. Okay? And that followed with a green day. We had a gap higher open, but again we failed to hit the BBC. And so here we sit. Notice that tiny little wick on the bottom of that red candle. That's because it found support. On a daily chart, whenever price finds a fib, you can almost always expect some type of reaction. Like say this. Or here where we pulled up on Friday and hit the 38, and look what it handed us. A move all the way back to the 24. Okay, all alerts are created on the 30-minute chart. Both the concierge trade alerts and the logic 247 alerts. Now, these are last week's zones. The weekly trading zones come out Monday morning at 6:15 a.m. Eastern. So any alerts that go out on Sunday night, logic or CTA, they're based on last week's zones. But any alert that goes out after 6:15 a.m. Monday morning is based on this week's zones. Okay. So we had a gap lower open last night on the ES, and it took us right down to the short target and the zone. Now that's a zone that was published last Monday at 6:15 a.m. Eastern. And as you can see, it's still doing its job. When price rallies up to a zone, we expect resistance. This is Friday. The vertical line separates today, Monday. Back here's Friday. If I scroll back further, you'll see Thursday and Wednesday and so forth and so on. So, came down to the zone, found support, caught a little bounce, finally traded below it. Once we got below it, what did we do? We pulled back up to the zone and the BBC, pulled back held. It holds more often than it doesn't. So we get a leg and a retracement, and the pullback holds. And then we get a leg and a retracement. Now notice that the step line here, see, on the way down these two were parallel, but that step line's starting to hook right. Because red and falling is directly above price, that's potential resistance. And when the step line crosses red and falling, you anticipate a retracement back to the BBC. Same is true when the step line crosses blue and climbing. Okay? All right. On the Dow. Gap lower open. Now remember, it was 7 minutes into the life of this candle that the CTAs came out. And we pretty quickly dropped to the short target. Consolidated there for quite a while. Got below it. Then we pulled back to the BBC. Pullback held. We got a leg. And this is how price always moves in legs. Leg retracement. Leg retracement. Leg retracement. Leg retracement. And we got the big leg. But the same thing's happening here. The step line's starting to curve to the right. When that step line crosses from the left side to the right side of red and falling, you should expect a rally back to the BBC. On the Russell, we gapped open, gapped lower on the open on the Russell last night. And in two 30-minute candles, we hit the short target to the tick. See here? Now, when the market finds support, it will bounce up to resistance, pull back to the BBC or the zone. We expect it to hold until proven otherwise. So just as support sent us to resistance, resistance sent us back to support. Okay? And then we moved sideways, and this retracement didn't have enough strength to get back to the BBC. So we got a leg, then we got a retracement. It took us back to the underside of the short target, which now has become resistance, resistance, resistance. Pull back to the BBC held, pull back to the BBC held, and the step line is starting to hook to the right. See how price is trapped. You've got resistance. Well, it's actually not trapped because we're below the step line. But the step line is directly above price. That represents resistance. Okay. If price gets below the step line here, it is just below it. The step line just became resistance. And in doing so, has given us a window of opportunity, something like 1844. We had to make it a little bigger. Need 2 points on the Russell. So 1844 to 1842. There you go. That is a window of opportunity, simply using market structure and our humble set of indicators. Okay. Keep in mind though, price may be finished falling, okay, because of what we see with the step line. On all three of the indices we've looked at so far, it's starting to hook right, but it hasn't crossed yet. In Q, gap lower open right to the zone. Now when price encounters a weekly zone, only one of three things happens. 70% of the times consolidation, 20% of the times rejection, 10% of the time is the slice. So we opened at the zone, pulled up to the BBC, resistance, pull back holes more often than not. Just like it did here, here, here. And then we traveled all the way down to the short target, pulled up to the BBC, the pullback held, then we got a leg, then another retracement to the BBC, then another leg. Now, here it looks a little bit different. We haven't really started to hook to the right, so we may drop a little bit lower on the NQ. Crude oil, as I said, we're now in the June contract M. So here was the open last night. We came down to the zone, bounced up to the BBC, and the pullback held. That's resistance times 2, the BBC and red and falling. And that sent us down to the target and actually through the target. Buyers came in here. We get a leg, a retracement, a leg. Pullback holds. So we get a leg and a retracement and the pullback holds. And then we get a leg that takes us all the way down to this zone where we consolidated. We bounced, but we didn't make it all the way this time. We got this leg, which took us all the way down to here, basically 61.75. And from there, buyers took us back to the BBC. Price is always trying to revert to the mean. The good news is the pullback holds more often than not. Held here, held here, held here. Now, you see how the step line crossed on crude? And we got a retracement to the BBC. Crude right now is in transition. It looks like it's trying to turn itself around. I would let price get back to about 62.65 to 62.75. Yep, that would be a nice long. If we continue to drop 61.95 down, yep, you don't have enough room there. So I would wait for price to get below this low before I went after anything short. Gold, huge day for gold. Keep in mind, these are last week's zones. This is where we closed on Friday. We gapped higher on the open last night on gold. 7 minutes into this candle. Now this candle opened at 33.47 and ran all the way to 33.68. That would be from 47 to 68. Is that 21 points? $2,100 per contract traded. That's that entire candle. But we continued right on up, although we didn't quite make it here. We got the huge leg. Should have got your goal for the day there. Retracement and a leg took us to the target, and then we took out the high from Friday right here. That's really important. So we get a leg and a retracement, a leg and a retracement, a leg and a retracement. Now we're just consolidating at last week's zone. It's over. Here's where we closed on Friday, and here's where we opened last night, above the BBC. When price is above the BBC, we anticipate higher prices. So we ran up to the zone, consolidated a little bit, and then bing, we hit the long target. Then we catch a leg and a retracement and see how the top of the long target in this case became support. Happens quite often. Then we get a leg here that takes us, see this area here and this area here, those are both important areas, okay? This time on this pullback, as you can see, again, the top of the long target held as support along with the BBC. The pullback to the BBC holds more often than not. And then you get a big leg, takes you all the way up to the zone. Only takes 2 pennies in silver to get your goal for the day. And from resistance at the zone, we dropped through the BBC, and then we pulled back, and the pullback held, and that sent us down to the zone, okay, where we are now currently consolidating. But this week's zones are already out to our members and our trial members, and any additional alerts that go out this week will of course be based on the new weekly zones. Okay. All right. One last look. We may break that 24. You got to embrace all possibilities if we do. Okay. Big pictures, potential support here, here, and then obviously here. One thing I didn't do, I didn't give you the numbers from around the world. That'll kind of put everything in perspective. All right, here we go. Starting with the cash markets or the indices, the Dow down 1,098 points, almost 3%. NASDAQ down 514, well over 3%. S&P 500 down 153, almost 3%. And the Russell 2000 down 39, a little over 2%. Now remember, when we hit the lowest weekly trading zone by a Tuesday morning, okay, then what history tells us over the last 15 years is that there's a high probability by the end of the week we'll be at the other end of the spectrum. Has there ever been a week that it didn't happen that way? Yes. Does it happen that way more often than not? Yep, it does. Okay. So to the commodity basket. Crude oil down $1.66, trading 63.02 last. That's a drop of 2.5%, or $1,660 per contract traded. Gold is up $97, trading 34.25 last. That's a gain of almost 3%. Silver up 15 cents, trading 32.62 last. Now, as I said, gold is up. It's now at $96.70. Every dollar that gold moves is worth $100 per contract traded. So multiply 96 times 100, and that'll tell you what today's move's worth with one contract. In the Asian markets at the close, Nikkei dropped 450 points. That's over 1.25%. Shanghai rose 14. Hang Seng gained 338, which is well over 1.5%. In the European markets at the close, FTSE was unchanged on the session. The DAX was down 105 points. The CAC was down 44 points. Now keep in mind that most of the world today is Easter Monday, and Congress is talking about bringing that holiday that, of course, the federal employees want another day off. Okay, so by this time next year, we'll probably join the rest of the world and celebrate Easter Monday. I don't know if that means they're going to take away our Good Friday holiday. Since they like a lot of time off, they might give us both Friday off and Monday off. So that explains a little bit about the prices that you just saw and the sell-off that we just saw and how it compares. And what we got from the rest of the world, now China, of course, they're communists, so they don't do Easter Monday, but most other nations do. Okay, all right. So that's going to wrap it for today. I got some things I got to do. We will close out with our good word for the day. Governed by Christ's love for us. 2 Corinthians 5:14. For the love of Christ compels us. The most powerful incentive to overcoming sin is not our love for Christ, but His love for us. Even with the best of intentions, our love for Him is subject to fluctuations. Jesus said to the church in Ephesus in Revelation 2:4, but I have this against you, that you have left your first love. He said to the church in Laodicea that their love had become lukewarm, Revelation 3:16. Many of us grew up in churches where we were told that the reason we yield to certain carnal traits is because we don't love the Lord enough. So we try harder without success and get discouraged. That's like putting the cart before the horse. It should be the other way around. The secret of victorious Christian living is not found in trying to love Jesus more, but in having a revelation of His love for you. That's why Paul wrote in 2 Corinthians 5:14, for the love of Christ compels us, since we have reached this conclusion, that one died for all, and therefore all died. Paul's actions were governed by the knowledge of Christ's incredible love for him. If you're struggling with sinful habits today, pray for a revelation of God's love for you. It makes all the difference. Paul writes, and that Christ may dwell in your hearts through faith. I pray that you, being rooted and firmly established in love, may be able to comprehend with all the saints what is the length and width, height and depth of God's love, and to know Christ's love that surpasses knowledge, so that you may be filled with all the fullness of God. That's Ephesians 3:17 through 19. And that's a good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.